Hey, we're back from the floor of the CME Group. This is Danny Riley on this Wednesday, July 28th. Look at the markets are getting slow, but they're slow. What's happened over the last couple of days, yesterday specifically, the market rallied and then sold off. That somewhat set today's price action into motion. Now, right now, the S&P is down 4.10 handles, down at the 1106 level. The way we see this is that the markets needed to have a pullback. The S&P has been up 13 out of the last 17 days, and whenever it's like that, whenever it goes that, when a statistic goes that far, generally you'll get some type of correction. And what we're seeing right now is we're seeing a little bit of a sell-off, a little bit of back and fill motion down toward the 03, 04 level. Now, statistically, going into the historically, going into the end of the July, and when the markets are in a bear market, the markets generally close weak. But statistically, the last couple of years have been good. So we're looking at some good stats going into Thursday and Friday for the July month end. As far as volumes are concerned here, we had about 260,000 minis traded before the open. And if you do the math right now, we've got about 780,000 minis. That is low for this time of the day. You know, as far as the rest of the day is concerned, you know, Tim from Topnotch has had a really good handle on this. I think it was last Tuesday before we took a break. He said something about some price action that he was looking into the S&P, and we'll let Tim take it from there.
This is Tim Hefke again from Topnotch Trading, coming back with a little bit of a recap since we haven't been on the show in 6 trading sessions. And as a matter of fact, it was last Tuesday was my last little outburst up here from Topnotch. And that day, Topnotch was still recommending to be long at 1062.60. And 4 times that level got breached last week at some point, and every day it settled above that price. The lowest that ever got was at 53. So on Tuesday last week, I recommended to still be long at 62.60 with the 53 stop. And if so, we'd get a 28.8 handle rally with our risk because I was recommending a 3-to-1 ratio. Well, that SPOO future that day had the nerve to go down to 61.20 one more time and then settle at 63.90. So what happens? The very next day, Topnotch says we're going to see 91.40. We hit 91.5, broke about 3 handles, and continued. We were looking for stops at 95.70 to 99 even in that area. It didn't happen that day. It happened the next day. And I recommended a week ago Tuesday that if they did find stops, we'd see 04, 08 with an objective of 11.1670. Yesterday, we come in, we got a high 18. Ta-da! So if you do the math, our first trade from Topnotch got you 28.8 handles. And if you wrote them up to 11.1670, I think it comes out to 54 handles. Not bad in a week's time, ladies and gentlemen, especially when we didn't even come close to getting stopped out anymore. So now that we've hit 11.1670 with an 18 even high, what's the market doing? It's drifted back 13 handles lower from that. So Topnotch says we need to see a price of maybe 1093.5 with an objective of 84 to 86 before these markets come back and take off for another run higher. However, overall, the last couple days, like Danny said, we're coming into the dog days of summer big time now. Most of Europe goes on vacation in August, so there's going to be slim pickings. All eyes this Friday are on the GDP. I want to see if the SPOO has enough moxie to go down and test this 93.5. Right now, that's the key level. We'll take it from there, and we'll see you later.